Good afternoon, Frank.
Good afternoon, Brian. How are you?
Okay, as I was thinking about the news over this past week, it seems to me that the most significant thing I'd seen that was not just more of what we knew already was the announcement that you showed me, or the article you showed me in Insurance Day about the increased risk that the insurance sector is looking forward to.
Mm-hmm.
And I started thinking about the globalization of risk and realized that you might have some things to say about that. And then I can think of a lot of things that help us to use that to understand what's going on in the world in general.
I think that's very true. I think some of the just to give you a small summary of the way the insurance market works. The policies that are placed, for example, on homeowners insurance in Philadelphia and in New Jersey and Delaware, are generally placed with local American insurance companies, smaller companies. Those companies then, in order to protect themselves against a local hurricane hit, for example, or an earthquake if you're on the West Coast, since they are local insurers, have a predominant geographical exposure in one area, will reinsure those risks with a larger reinsurance company. And that movement is called a retrocession. So those reinsurance companies then themselves will often buy reinsurance from other reinsurance companies.
Sounds like securitization.
It's very much like that. And in fact, if you're talking about a highly protected risk, like, for example, the World Trade Center was, that becomes even more distinctive because you have a virtual vertical ladder then with a group of insurers in for losses, say, from $0 to $100 million, where the premium is highest because you're going to be expecting them to get hit more often. I mean, anything can happen. A big storm can blow out windows, etc. And then you have another group from, say, $100 million to $200 million, where the premium will be lower. Then another group from 300 to 400, and so on. So all of a sudden you get these people, which is what happened unfortunately on September 11th, at the tippy top, who might be on the layer from 900 million to $1 billion, who are only charging a very small amount of premium because they never expected to be touched, who had to pay out because there was a total loss. And that then begins a whole sequence of events with everybody, since it's sort of incestuous, as you might gather, people are laying off and buying from each other. People then have to scurry around to make sure that the capital is forthcoming and the claim can be paid. Now, the nature of the industry is once you get into that, to use that example, that 200 to $300 million layer level, you're talking about companies, for example, like Swiss Re, like Lloyd's of London, like Munich Re, very, very, very big global players who take in risk from all geographical areas in the world, who take in risk broken down into many, many different perils: flood risk, earthquake risk, aviation risk, drought risk. You can go right down the line, anything under the sun. So these people are very, very attuned to changes in the world: political changes, climate changes, product changes, weakening of air structures that might be announced, product recalls, shifts in political regimes. I mean, anything that's going to affect a possibility of a claim being paid is picked up by these people and factored into the rates, or in fact factored into coming to a decision that they're not going to write a particular line of business in a particular geographical area, which when that happens then investment is at a standstill, because Western investment in particular is not going to come into an area unless the investment can be insured, unless the factory can be insured against basic loss such as fire or theft. So it's a real cascade effect that often people tend to overlook.
Now, presumably, this has changed over the last 50 years and changed a lot before then. And I, without having any prior knowledge of this at all, I would imagine that shipping began to be insured throughout the world from London in the 19th century, possibly the 18th century.
That's correct. Shipping is really where it all began. I mean, you can trace the antecedents of insurance back to the ancient Greeks. You can follow it through the Italian city-states when those merchants were sending their goods up to the French and Belgian spring fairs. But those were sort of pooling arrangements.
But the Merchant of Venice didn't have insurance.
Well, I don't know. You'd have to check with Shakespeare on that.
But presumably, when the East India Company started a major amount of shipping in the Indian Ocean, I can guess that's when it would have started, and developed under imperial systems, but still only dealing with one sector of the economy, probably on that geographical scale.
Very, very much so. The modern insurance, as we know it, began with John Lloyd's coffee house in London, down on the Thames River in 1667, if I believe. And it began very informally.
Just after the fire.
That's correct. That's correct. Which also gave some spur to this as well. But ship owners would gather down there in the morning and literally wait for their ships to come in. And some days the ships didn't come in. And some days other ships would come in and tell them that their ship that they were waiting for was not going to come in because they saw it sunk. So gradually a collective kind of mentality developed, and they began to recognize that there might be a way to protect each other here. And they began to put together pools of money, and then sharp people got involved and began to formalize it. And then one thing led to another, and by the mid-1700s, Lloyd's of London was in business.
So when did it start expanding beyond that sector?
Well, I can tell you for sure, with all certainty, that in 1906, when the great San Francisco earthquake occurred, within 2 days, the news had reached London, and Cuthbert Heath, who was the founder of a insurance brokerage agency that still exists in London, it's called C.L. Heath and Company, sent back, he was also, by the way, the inventor of that vertical ladder of risk that I referred to earlier with the World Trade Center example. Prior to that, people were scratching their heads with a highly protected risk, saying, well, one company can't be on this. And he said, well, wait a minute, why don't we take a lot of companies and you people each take a different stripe of the barbershop pole? And anyway, Cuthbert Heath, when being implored by the American insurance companies that had purchased policies from the reinsurers in London, sent back the famous telegram that is the motto of Lloyd's to this day: pay all claims. And that was the reassurance that the primary American companies needed, because they knew that London was going to stand behind them and they would be paid. So again, in many ways, the resurrection of San Francisco after that big earthquake was in part due to the certainty that the shop owners and building owners were going to be compensated.
And that was probably the beginning of the end of the British Empire.
Well, it's funny because even to this day, if you go to Lloyd's, even though shipping has waned in importance in terms of sheer dollar value, when compared to homeowners risk, aviation risk, satellite risk, intellectual property risk, everything under the sun, the shipping still maintains a very august position, and the shipping syndicates are securely lodged in that first floor of Lloyd's. The shipping underwriters are right there. The Lutine bell is there, which is a famous bell that came off His Majesty's ship, the Lutine, is still rung whenever there's a ship sinking. And everybody gathers for a moment of solemnity in the main atrium, and then they go back to work.
But presumably, it expanded geographically into natural disasters at a particular time, and into political risk at a particular time.
It did, and for two reasons. People loaning money or investing money into ventures that were affected by both natural disasters and political risk were desperately seeking some sort of protection. And secondly, there was a lot of capital floating around, and still is, in the reinsurance industry that was looking to be put to work. And these people began to recognize that sharp underwriters could take actuarial models and predict the chances of an overthrow of President Mobutu in Zaire. They could predict perhaps the frequency of hurricanes. And then they could then boil this all down to a nice premium that could be charged against an owner of a factory that was being told by his investors that he wasn't going to get his money unless he could insure it and at least be sure the investors could be paid back in the event of a loss.
Well, it sounds to me as though we could write a history of globalization around the theme of expanding insurance sector.
Well, you could do that, but perhaps as properly, the insurance sector very closely follows the expansion of globalization. I don't know if it's
But
a
it
chicken or
sounds though
egg
it was
thing.
in advance of it that the insuring shipping worldwide was before people were thinking in global terms. People didn't really start thinking in global terms until 100 years ago at most.
Mm-hmm.
And then, it sounds to me from what you just said that the expansion into natural disasters and into political risks was something that the insurance sector expanded before people were actually thinking in global terms.
Yes, that's true.
And that's what's interesting because it's obviously something that's being driven by forces that are very, very much involved in globalization, but before the public is really aware of globalization. And I find this particularly interesting because we're going through you've heard me say before, I think we're going through the crucial phase of globalization at the moment. And I think it's the crucial phase because the rate of change is faster than it's ever been, mm-hmm. and possibly faster than it ever will be, since the rate of population growth is probably going to slow down. And part of the reason why it's crucial is that our ability to manage events worldwide is not as good as it used to be. Mm-hmm. We've left the age in which states were independent and talked to each other and managed what went on inside them. In the latter part of that age, states began to depend upon nations within them to give them legitimacy and make it possible for them to generate enough fellow feeling amongst their populations so that they would do what they were told. Mm-hmm. We're now leaving that age when you don't know what the relationship is between a nation and a state in many parts of the world anymore. Mm-hmm. And maybe for that reason, we seem to there's a sort of famine of good leadership in the world at the moment. I mean, there are a few good leaders in some states, but generally, leaders of governments aren't so secure in their ability to get things done as they used to be. And the number of things that get done internationally outside of states has been increasing over the last couple of decades. Now, why I'm interested in insurance so much is that I think it's a form of self-regulation that's emerging simply as a consequence of market interests.
It's more so than you might even think, because let's go back to one of those examples. Let's take a company that is based in Pennsylvania that is writing local Pennsylvania risk. Now, that company, when it buys reinsurance to protect against a hurricane hitting Philadelphia, will undoubtedly have guidelines that mandate that it can only purchase reinsurance from companies that have an A rating from Best's or Standard & Poor's or better. So everybody else is wiped out. Anybody who's A- or B+ or triple B+, they can't compete. So it's only A or better. Now, that means then that those reinsurers do anything in order to maintain that rating. They make sure they keep their capital and surplus appropriate. They make sure they keep their line of business diversity really as horizontally spread out as possible. They make sure that they manage their claims very appropriately. They make sure that they reserve adequately. And AM Best, which is the insurer equivalent of Standard & Poor's, comes in and very colonoscopically, if that's a proper word, will come in and run checks on companies to make sure that they're not getting snowed.
That's very interesting because it seems to me that the more global the world community becomes, the more obvious it becomes that we're never going to have leaders like we've had in the past, because there's no way we can elect them on a global level, or even something a lot less than a global level. And it's not possible for leaders through sheer charisma or traditional ideas of legitimacy to govern communities of the size that we're going to have to deal with. And so other sorts of mechanisms have got to develop. And I've been trying to work out for some time now what those mechanisms could possibly be, expecting that things in the future, politically, economically, and in every other sphere, we're going to have to depend upon negotiation to a large extent, but there has to be a framework for negotiation. Money is obviously going to be a part of it, because money is the way we recognize social relationships in the world now. Money, we used to be able to command the value of money from one place in the world, like London and then New York or Washington. We can't do that anymore. The value of money is becoming more and more negotiated on a local level. Insurance may turn out to be the main idiom for to provide a framework of negotiation for a particular phase of the coming process.
It could be, and I'll just give you an anecdote. After the collapse of the Soviet Union, as the former satellite states were going through their death throes, Albania was one of the last ones when the Hoxas ended up giving up the ghost. And there was tremendous civil strife in Tirana, looting, rioting, and it developed, and I used to carry this around with me with an article from the New York Times. We would use it in presentations. On one day, there was a rampage in a group of factories on the outskirts of town, and then all of a sudden, it developed almost spontaneously that several hundred Albanians formed a human chain around the Coca-Cola plant to ensure that it was not harmed, because many of them worked there. So there's a connection that humans understand, even coming out of a 60-year socialist cycle, that this factory put bread on the table, kept the roof over our heads, and we're not going to burn it to the ground. Stupid. And the other point I'd make is that these people, for example, who run Lloyd's of London, are perhaps lacking in some ways in charisma compared to an American or a British political candidate. But I have rarely seen such business people, men and women included, who have such a diversity of understanding of the various factors in the world, and would be very comfortable having a discussion with you on this topic.
Maybe we should try to invite some of them to a session sometime.
I'd be happy to. I know a number of them quite well, actually. They'd be interested in talking to you.
Okay, well, I think we've reached the end of our time for today. That was particularly interesting. Thank you.
Good. Thank you, Professor.